Hey everyone, I'd like to first start by inviting you to the biggest event of the year, Fall Summit, November the 3rd. If you're in Vancouver especially, please come out. So many kombucha on tap and a big Indian buffet. Lots of new updates as well as we introduce the new app. But for now, I'd like to take a moment to reintroduce the company, talk about how you can get started if you haven't already, and address Sharia compliance before moving on to expected returns and potential risks. So let's just start with our deck here. Flat fee, debt-free leasing. That's what we're doing. Why? Interest rates, the financial system, it's confusing. We are at the whim of central banks setting their interest rate policies. And when it comes to just your monthly payment, you don't know how much is actually going to interest this month without checking your statements and recalculating everything. But it's so much simpler to know, like with your Netflix subscription, it's a flat fee per month. That's what we're offering. Also, with credit scores, the system's quite broken and it's really unfair, especially if you're under 700 in credit score. It's a struggle to really get back into prime given the interest rates that you are offered. Now, our solution gives you more flexibility. It allows you to get a better rate of return based on your cash available, and we'll explain that in a bit in detail. But you can't work the system without offering something to the investors. In the current lending system, it's lenders and they want their interest rate, but we can do something even better. We can offer upside on their investments, and it's not going to be boring with 2-3% or 6% at your bank. You are going to have inflation beating returns as people continue to use the asset and continue to make their payments. So, if you want to invest in the company, we can have that as a separate discussion. We have about $1 million in assets so far, hoping to double by end of year. But otherwise, I'll keep this conversation focused more on the lease tokens, and how you can invest in our investment product. So, how the leasing works, we partner with dealerships so that when their customers show up and they're interested in a car, they can file an application to Econommi. They send us 2 months bank statements, 2 months pay stubs, and their credit score as well, which we verify. And we also inspect the car as well, make sure it's good for the market price and has everything done on it. Once everything's good there, we purchase the car and then sign the lease and start taking the monthly payments. Essentially, in this example, we're taking a $10,000 car, and it's worked out over 60 months to be $250 a month for the lease. And here's where the magic happens, and I'll show you what it looks like on the platform. The $10,000 we recoup by selling 100 pieces or $100 each in the lease contract. If you purchase a share in this lease agreement, you get a share of the $250 a month, for $250 a month for every $100 share that you purchase. So let's go take a look at what this is like on the app itself. So I'm logged in here on my personal account, and you can see in the marketplace there's a few cars like this Mercedes here, 40% down payment, 40 tokens currently available of 158 total, pays out $246 a month from the $428.24 monthly payment that is received from the lessee. And you can go ahead and buy or sell some of these tokens. I currently don't have any money in my wallet to purchase a token, so I'm going to show you what I do have. I have a lease token in my portfolio. So I can come here and review the same things, but in this option I'm redeeming this token so I can get some money back, so I can diversify or cash out. I must say redemption's not always available. It depends on how much reserve we have to sustain redemptions on our platform. We're not a bank yet, unfortunately. So I will just go ahead and sell this token, and hopefully it will show up in my wallet. See, it's 85.45, and now I can go back to the marketplace and see if there's anything else I might want, like the Scion. So I might want to purchase this. We got one to purchase. We want to buy one. Here's some important documents I'll just point you to. So the offering memorandum is the big one. I encourage everyone to review this, especially with an advisor, because it's a really long document, but it has details on really how the business operates, how the funds are going to be used, and also has the audited financial statements from the past year as well. Shorter documents are the token risks and rights, as well as the terms of subscription. They don't capture, what the offering memorandum captures, so still important to review the offering memorandum, but also recommend you to read these at least once. These don't really change. And then once you're ready, you can go ahead and accept to buy, confirm the purchase. Once it's been purchased, you will see that it shows up on the lease token. See, so now I have ownership of the Scion, and every month I'm earning 246, and this 246 will show up in my wallet on a daily basis as the payments are made. If you haven't made an account yet, I'm just gonna walk you through that really quickly as well. Should be intuitive, but like, you click on the login sign up, it takes you to this page. You go to create an account, and here you can put in your email. So let's just do corti09876654@gmail.com and put in a password. Continue. You'll need to fill out your name, your address in the next tab, as well as in the third tab you'll be asked for your ID. All these information are important for us to report your investments to the regulators and authorities. And then finally, in the last tab, you'll get a DocuSign to sign off on how much you are investing in the platform, so that there's a legal tie between your software purchases and your investment. So now I want to quickly address the Sharia compliance, because a lot of our customers are Muslim and interested in this. I'm happy to say that we are Sharia compliant, as certified by Dr. Ahsin Lahsasna. He has extensive experience in the space, many citations and certifications. He actively contributes to the AOFI standards and has reviewed our lease tokens and the lease contracts as well. It's an ongoing engagement, so as we continue to improve and make changes, Dr. Lahsasna continues to provide advice and updates to our offering. Now, finally, let's dig into the risks and possible returns. So, first I want to talk about the risks. There's three main risks. One is the default risk. So if the customer defaults on the car, meaning they can't finish the contract, and we have to go and repossess the car. So within 30 days, we will usually repossess the car and auction it or sell it off. Generally, the down payment or prepayment that we take on the car, which ranges between 10 to 50% even, will cover such repossession costs. However, in the case that it doesn't, you are exposed to this risk as an investor in the car. It's our current default rate somewhere around 7%, so it's not very common, but it does happen, and you may lose a small portion of your principal. The other two risks are a matter of liquidity. As I mentioned before, redemption is not always available. You might be tied into your investment for a longer period of time, until the end of the lease, that is. The main thing we can guarantee is that the monthly payment that comes to us every month, that is available to you, unless you choose to reinvest that. And then finally, it's management risks. So that's on us, that's on the team. We need to be managing the company properly to ensure that your investments are returning regularly. Now, we have separated the cars themselves from the company in a sense, in either putting them in the subsidiary or via contract. And should, God forbid, the company not do well, the cars are still protected. That's your interest in the car. However, in such a transition, there is still some risk. Now, coming to what your potential earnings are, I actually want to dig back into the example that we had before, right? Like the $10,000 car, over 60 months, $250 a month in payments. What does that actually look like in detail, right? When it comes to the tokens issued, 100 tokens issued, you're getting $250 a month in payments. And the key thing to notice is that we've mainly been talking about the ROA so far, or the return on asset. Now, there's three numbers here: the ROA and the annualized ROI and the IRR, and they all attempt to explain what your returns will look like. Now, ROA assumes that you are investing $100 or something and not reinvesting any of your earnings, and not reinvesting, not withdrawing the earnings. You're just keeping the money in your wallet. In this scenario, basically, if you buy a $100 token, you will eventually end up with 115 total. So that's going to be the ROA. It's not the full picture though, because generally most people are reinvesting their earnings or withdrawing them. And when you're reinvesting or withdrawing your earnings, you're actually experiencing a different return than the ROA, which is the return on asset on the token itself. You're experiencing, an ROI, or in different wording, IRR, which I'll come to in a bit. So let's just talk about the ROI. That's something I think we understand more easily. It's like how much profit are you earning per money invested. So what I've done, basically, I've taken what the price of the car might be in different months, right? Or price of the token. So every token starts at $100, but as the lessee pays down the depreciation cost, the principal is returned every month with the profits. And as the principal is returned, the price of the tokens go down. And what this means is, because of our flat fee structure, you're actually going to experience a increasing ROI. So if you take, if we look back here, this is 83 cents, right? In this example, you're earning every month of the $2.50 or $2.49, 166 is actually going to the depreciation or principal recovery, and then 83 cents is actually going towards the profit. So if you take this 83 cents based on the price of the month at that time, you can calculate a different ROI for every month. So just to redo it for you here, equals 0.83 over the new price in month 7, right? You get a monthly ROI. You take this monthly ROI, just multiply it by 12 to get an annual number, and effectively you get to 11.27%, or in this case 11.32%. The main difference being that there's a rounding going on. Generally, the company keeps any rounding profits, so you know. So now we've talked about the ROA versus the ROI and how that's different, right? So to combine the two or get a better understanding, even more comparatively to what interest rates offer in terms of returns, the IRR function is used. It's the internal rate of return. Basically, the question this internal rate of return answers is, how much in interest would I have to be earning to be making a similar return? So the way you kind of calculate it is, you just use the function. You take the initial investment and the monthly payments that you will be receiving over the total period, and once you plug those in and you annualize that, it turns into roughly 15% or 17%. Now, historically speaking, everyone, depending on your investments, when you invested and how you invested, and which tokens you've invested in, your returns will be at minimum around 10%, and then they can move higher. On average, last year, for example, we've paid out around 15% as a median number across everybody investing in the company. So this might take some time to sink in, or understand better if you don't have the background with IRR, but I will make one last attempt to just show you, using existing data, what the returns might look like. So what I've done is we've taken all the active leases that we've done to date, and all the terminated ones as well, to see whether they're whether they were buyout, completed, or defaulted, right? And buyout here means something, a lease that has been bought out early. The car was the lessee came with the cash and said, "Hey, can I buy the car?" And we said yes. And what we've done is we've pulled up an analysis to determine how much, what percentage of our leases continue to remain active versus have been bought out early versus completed versus default, and what is the typical return experienced or even lost. Now, in the default case, we haven't really experienced a loss just yet, but this helps us to calculate an average return based on different events that have happened using the data that we currently have. And using this, we can extrapolate a calculation or projection into the future of what an investment might look like, assuming that you are reinvesting regularly. So I can share this document with you if you like, but I'm taking examples of a few options. So for example, $100, if you continuously reinvest that for over a period of 1, 2, 3, 4, 5 years, you can experience a 10%, 10.8% IRR. or 13.44% average ROI. This obviously differs if you invest more. If you invest more, it gives you the opportunity to reinvest more as well, and it gives you better returns, because if you're reinvesting more regularly, then you can experience a stronger compounding effect. So even if you get to like larger amounts, since this is there is an option available for you if you're investing a huge amount above $150,000, that we actually put you in a separate vehicle to protect your investments even better. It's called Economy Capital. We give you a bit more of a concierge service. So if you are considering investing a higher number, please do get in touch with me. But as you can see, compounding just gives you a better potential multiple, a better potential return. And to better contrast that, or to show you what that looks like in terms of if you're withdrawing money, for example, every month, you're just withdrawing your profits, for example, you get a lower return because you're not compounding the profits, but it's still generally increasing. Or you could alternatively, set that to zero, but you add on every month, you add on $500 every month, you can see that number continue to compound and grow. All of these, I should finally say, do not take into consideration a tax rate. These are all pre-tax numbers that I've showed you. But in this calculator, you can actually just plug in a tax amount. So if you're on the 25% tax rate overall, then it will reduce your returns by a little bit, because the taxes do eat into it. We do offer not yet, but we are working towards a tax-free savings account solution for everybody, where you can earn tax-free at around 11%, because we're doing a CCPC model. If you'd like to learn about that too, please get in touch, and we can talk further. That's about everything I have for today. Hope you enjoyed it, and let's get in touch, and I hope to see you at the event.